Question number 5, the Honourable Judith Collins.
Thank you. Well, thank you very much. Mr. Minister of Finance, what recent reports has he received on the government's finances, and how does this compare with forecasts in the half-year update in December?
Honourable Bill English.
It's a very good question. This morning the Treasury released the government's... Just listen. This morning the Treasury released the government's financial statements for 7 months to January. These show, in the year to January, the government posted a surplus of $77 million. The surplus was driven by higher than expected tax revenue and lower than expected expenses. The outturn was $712 million better than forecast by Treasury in the half-year update in December. Although it is too early to say whether we will have a surplus at the end of the 2014-15 year, this is a part-year surplus, the first one for some years, and it demonstrates that the government has made significant strides in managing public finances.
Order. Supplementary question, the Honourable Judith Collins.
To the Minister, what are the implications of this result on the full-year surplus for 2014-15?
Honourable Bill English.
Well, Mr Speaker, one of the implications is it looks a bit more likely we could get to a full-year surplus than perhaps we thought back in December. Corporate tax and source deductions are both ahead of forecast, but actually these are both pretty difficult numbers to forecast accurately. It remains to be seen whether the higher than expected growth in revenue continues through the rest of the financial year. The government still considers that the strong economy and responsible fiscal management can deliver a surplus when the final accounts are published in October, despite the fact that Treasury's latest forecasts in December show a $572 million deficit. We won't know whether we've achieved a surplus for the whole year until the final accounts are published in October, but it is nice to have one for at least 1 month.
Supplementary question, Mr Speaker.
Supplementary question, Grant Robertson.
In light of those answers about the surplus, was then ACC Minister Judith Collins correct when she said that the government had ignored ACC's recommendations for bigger cuts for the 3rd year running because we need to get to surplus?
Honourable Bill English.
Mr Speaker, as I answered that question yesterday, every minister thinks that the decisions that are made with respect to their budget bids, or in this case the ACC bids, every minister believes that it's their bid that's going to put us over the line or not over the line. And in the case of the minister's statement, it's one of many decisions made by government that add up to a surplus or a deficit. But I have to say the former Minister of ACC did a great job of reducing levies, and we now levy $1.5 billion less than just a few years ago.
Mr Speaker.
Point of order.
Order.
Point of order.
Order. Point of order, Dr. Russell.
Mr Robertson's question was a very direct question which has not been answered once again by this minister.
The member will
again.
The member will resume his seat. The minister addressed the question. I accept he didn't answer the question as to whether the minister was correct, but he pointed out why every minister has a different perspective as they argue their case around the formation of a budget bid. Order. Supplementary question, the Honourable Judith Collins.
To the Minister. What have been the trends in revenue forecasts in recent years, and how has this impacted the return to surplus?
Honourable Bill English.
Well, Mr Speaker, the revenue has gone up each year, but we're in the unusual situation where we have solid economic growth, but also historically low inflation. So this is good for New Zealand households because it means their cost of living is increasing at very low rates, but it makes it more challenging for the government because higher inflation pushes up the tax base and enables us to collect more tax in a growing economy. However, the government's management of expenditure has been disciplined, and despite the fact that the tax base isn't growing as fast as was expected, we are able to manage expenditure and therefore stay on track to surplus.
Supplementary question, Honourable Judith Collins.
To the Minister, what were the main drivers of the better than expected financial result in the year to January?
Honourable Bill English.
Well, Mr Speaker, in any given month there's things move up and down, and of course they can change in subsequent months. But in the month of January, corporate tax was $158 million above the forecasts, and source deductions such as PAYE were $146 million, or 1% above forecasts. Expenses were around $250 million lower for the first half of the financial year, with variances spread across a number of departments, but it's likely that some of this lower expenditure will be due to timing differences and the money will be spent later in the year. But these are encouraging trends: slightly higher tax revenue than expected and expenditure on track or a bit lower.
Question number 6, the Honourable Annette King.
Thank you, Mr Speaker. My question